it's not rocket science. It's just you got to understand where you are financially, and literally
It's discipline.
It's
Yeah.
discipline. It's very simple. If you have credit, don't use it unless you need it, and have a purpose for it, and then pay it off, and don't use too much of it. That's, I think, the simplest advice. It's like you don't have to overthink it.
You can do this. You can do this. Like you can do it. Hey, welcome back. This is part 2 of the Clear Close reacting to credit advice on YouTube. The previous episode, we reviewed a few different creators and their advice on how to boost your credit score. And we have a few more to share with you and react to today. Hey, I'm Peter. This is Jason. We're the Clear Close, the mortgage experts that help you get clear to close on your next mortgage. And we're here reacting to credit advice on YouTube. This video is specifically for people who have been denied on a purchase loan or denied on refinance or maybe even an equity loan like a HELOC or a HE loan. And you're looking to find out ways to improve your credit score so that you can go back, reapply, and qualify. Some of the information on YouTube is geared towards brand new people or like younger people with just starting out in the credit journey, and some of the advice on YouTube is kind of like evergreen. It's for everyone, and so Jason and I, we're going to go through reacting and kind of filtering out for you which advice applies to which type of people or which type of context. Like we always say, there's a link in the description if you want to schedule a one-on-one consultation, whether that's for purchase, whether that's for refi or HELOC, reverse HE loan, any one of those products that a licensed mortgage originator can do. The Clear Close can help you take care of that. All right, so let's move on to the next video. This is a creator named Sherry Beckley. Apparently, she is a credit repair specialist, and she's helped a lot of people. She has like a boot camp or something that she does, and her video is called "The Secret to Increase Your Credit Score by 100 Points in 5 Days." Oh my goodness, that sounds like clickbait. But let's see what she says.
We'll see. Let's see if it's useful for a mortgage.
Has additional space to bring that credit card utilization down before the report date to the credit bureaus. If not, then you're stuck with that for the next 30 days on your credit report. Also, if you're saying, hey, I don't even have any more room to transfer that balance over, what you want to do is aim at that credit card with the highest individual utilization and start over the next 4 weeks. Pay on that card every time you get paid. So if it's weekly, pay what you can weekly on that card. So if it's $30, $25 every week, make that payment. If it's every 2 weeks and you want to put a minimum of $25 every week, make sure that 2-week payment come in. You put $50 on that card, and the next payment you put $50 on that card plus the minimum payment. So doing that, it would add up, and when that card reports, you'll start to see your score go up. And then you want to rotate that. Make sure you still maintain the minimum payments on your other cards if you are financially strapped. But if you can do that, and if you have multiple cards, then you need to go ahead and put payments on both cards at the same time of what you can afford, but try to target majority of your payments to the highest individual utilization so your score can go up.
Okay, that's kind of unique. So it's basically a different way to keep utilization down on different credit cards. So if you watch this video, and we're going to link all the videos that we react to in the show notes, but if you go to the video and you watch a little bit before, she talks about how you don't want a credit card that is like your main credit card, I guess, at like 90% utilization. Like that will destroy your credit. So she's saying if you do have something like that, where you have maybe like a Macy's card or like a JCPenney card, right, or Home Depot card, and that balance, the available credit limit is very low, like $500, and you're used to using it, like maxing out that credit card, that's a high utilization rate. She's saying, number one, don't do that. But if you can't help it and that is like something that you need to pay down, you can use balance transfers to average out your utilization. So Jason, what is your reaction to that?
I mean, those are definitely tricks to get your utilization down. But if you're like maxed out on those credit cards, you got a budget problem, right? If you're in a situation you're maxing out all those store brand credit cards and balance transferring and all of that stuff to artificially boost
Let's
your
look at
credit
this in
score.
terms of let's look at this in the lens of like crisis management. Someone is in crisis.
Mm-hmm.
They're trying to figure out how to improve their credit score. Like they just woke up to
Mm-hmm.
this situation, right? Like, now they're on the path to, I need to fix my life. I need to fix my credit or else I'm going to be in dire straits, and they feel the
Mm-hmm.
panic set in. And we've talked to people like that. So,
Yeah,
you know,
and those folks are not getting a mortgage in most cases, frankly,
no,
because
no, yeah, they won't be able to qualify. Not
if they're
yet.
maxed out like this, you're probably not even above 580 to get a traditional FHA loan, right? Because
Mhm.
that starts at 580 for most people. So, I mean, if you're in this situation, it's a long term. You're in it for the long haul. There's no fast boost to your credit. So that's number one, what I want to say. So I'm not a financial advisor in that regard, but it's like what she says is true about utilization because you want to get it down. But I'm having a hard time with this series of videos, Peter. Like I'm having a hard time getting away from bad budgeting because if you're maxed out on your credit cards, folks, getting a mortgage is not the problem right now. You need to
Yeah, these
fix
balance transfer tricks is not going to help
it's
solve
not
the
gonna
underlying problem.
it's only gonna delay or maybe mask or you do it and you end up getting the mortgage or HELOC, but you're gonna end up back in the same position, right? With the HELOC and more credit card debt later.
So just to recap, this is a very specific type of situation where you have this balance transfer can work. Otherwise, you're just gonna have to attack that. All right. So this next one is the famous Mr. Graham Stephen, 5 million subscribers on YouTube. He's a legend. Once in a while, like every few years, he'll talk about credit, like how to boost your credit score, right? So
here's some methods that you could begin using to instantly boost up your credit score. First, you're going to need to go and view your credit score by either signing up for free at creditkarma.com, or you could get your actual credit report and score for free once a year at annualcreditreport.com. And if any websites ever ask you to pay for your credit report, just say no to it because there's no point in paying for something that's already free. But once you see your report, you're going to be able to look through it and see which items can be improved to help increase your score, and usually it's going to be one of these. One, you don't have enough credit. If you're relatively new to this, or you haven't had enough time to open up a credit card and make on-time payments, then most likely your score is not high because you don't have enough history yet. If that's the case, don't worry, I'll go over some solutions to this later on. The second, maybe you have a late payment, or two, or three, or geez, even more than that. If that's the case, any late payments like this are going to stay on your report for 7 years, which is a lot of bad luck for your credit score. But thankfully, there are some ways around this that, again, I'll cover shortly. Now, third, check to see if you have any accounts and collections, and I'm not going to lie, if you do, that's pretty bad. Now, for anyone not aware, this is what happens when you're so late on a payment, by usually more than 180 days, that your lender just charges it off as a total loss. And then they'll sell that debt to a third-party debt collections agency who will then call you nonstop just asking you to pay it off. Now, fourth, check to see if you have any high balances or any maxed out credit lines. This is what happens when you charge or borrow the maximum you're allowed or very close to it. When this happens, lenders see you as a bigger risk because otherwise, why would you be maxing out all your credit cards? And because of that, your score is lowered. And fifth, check to see if there are any bankruptcies or foreclosures on your credit report. Now, this should be an obvious one, but sometimes marks like this are left on accidentally longer than they should be. Or some people might have misinformation on there or have had their identity stolen. So once you see what's affecting your score, you'll be able to better target that and then fix it. But generally speaking, these will have the quickest impact.
So Graham Stephen talking about doing the hard work, doing the hard work of looking up your credit score, reviewing your credit reports through those websites that he mentioned. These are free reports, right? And some people don't even like looking at their bank accounts. Some people don't even like to look at their credit card statements. But if you want good things in your life, you're gonna have to do the hard work.
Like especially if you're trying to borrow money at all, it's like you have to know what the lenders and loan officers are going to be looking at to help you qualify, right? So 100%, you need to be aware of what's on your credit history, like what's on your report. Is it all accurate? Like you have to monitor it. Like you need to make sure it's in tip-top shape. So this is solid advice from Graham.
Yeah. And if there's a mistake or inaccuracy, like that's on you to get it fixed. Yeah.
Right. You can get it directly from the bureaus. I get mine directly from the bureaus because I can see it in real time whenever I want to log into my Experian app, for example. Man, Experian, can you sponsor us? Because I keep saying Experian. So is that even possible?
Maybe once we get monetized.
No.
Quick question. Some people might not know this, but if you request your credit report, does it affect your credit score?
No, you're asking for your free report, like annualcreditreport.com, I think was the website that Graham shared. Like, there's no cost to it. You get to see your whole credit history. You got to remember too, though, they don't give you the credit score, right, for the free credit report, like the full detailed credit report. There's no score attached to it. It just gives you your full history of every trade line that should be on the report with your personal information.
Let's move on to the next one. This is creator named Noel Randall. She's got almost 1 million subs, so she's quite up there. And her video title is called "How to Raise Your Credit Score by 200 Points."
So when it comes to personal credit, there's a major problem that many people have already found, and this is one of the things that I found. As I started using a lot of my credit cards, my credit score started to go way down, but I needed to use my personal credit in order to build my business. So I'll take you back. Many of you guys know that I started investing in real estate around 2002, 2003, and I was a complete disaster. I ended up losing everything and ended up back in my parents' basement with multiple foreclosures and bad credit. I was a disaster. But while I was in my parents' basement, I learned something called wholesaling. I learned how to find people with property problems, and I learned how to get those properties under contract and then flip those contracts to other investors for a fee. I literally started making $5,000 and $10,000 per deal, and I was able to get myself out of my parents' basement. The problem is, I still kind of had bad credit. I would pay off some of my debts, and I started paying down things and trying to get myself back into position, but I still had a very low credit score because of all of the foreclosures and the bankruptcies that were on my credit report. So when I was looking to increase my credit score, I had to get creative. One of the things that I did was I got someone to sponsor me. So many of you guys know that you can find someone to put you as an authorized user on their credit cards. I did this and my credit score increased by over 100 points. I literally was able to ask my dad if he would put me on some of his credit cards. I knew he had very good credit, but I knew he wasn't going to like co-sign for me or anything like that. So I simply asked if he could put me on his credit cards as an authorized user, especially credit cards that had no balance and a very high credit limit. For example, he had an American Express that had like an $8,000 limit or something like that, and he didn't carry a balance on it, meaning he never really used the card, and he had had that card for like 7 or 8 years. So when he added me to that account, they started reporting that on my personal credit report as an authorized user, and my credit score increased. He did that on about 5 or 6 of his credit cards, and that was how I was able to get my credit score up 100 points. So that's how you get your first 100 points. You need to find a sponsor. You need to find someone with very good personal credit and ask them if they will allow you to be an authorized user on those accounts. They do not have to even give you the credit card, so there's very little risk to them.
All right. So let's bring this back to our context. Remember, this video or this series of videos is for people who have applied for a mortgage or have applied for an equity loan or a refinance, but they've gotten denied because their credit wasn't good enough or their credit wasn't high enough or met that minimum threshold. So in that specific context, would this be something that you would recommend to people, like find a sponsor to put them on as an authorized user, not giving them access to the card, right? Just giving them access to boost their credit score this way?
I would not give advice like this. Just to be clear, as a mortgage banker, I'm not a credit repair specialist or advisor. Like, lenders aren't blind to this, right? I can tell you right now, it's like if you're artificially adding yourself and you don't have credit history because there's no history for whatever reason in the last 2 or 3 years of trade lines of your own, just because you get added to your dad or your mom's credit card as an authorized user, that doesn't show the lender like you have mature history. Mature recent history is the keyword. So it's like you may have gotten added to that your dad's Amex for $8,000 credit limit, and and the age of the account is 8 to 7 years old. Yes, it'll help you get some history on your report to get a better FICO score, but no, it doesn't guarantee you're going to get that new first-time home buyer loan or home purchase going, because you have no track record of your own to qualify. So it's like you can try to game it, but it's not really a fast track guarantee you're going to get a loan. But getting help from family in regards to that to establish credit when you're younger, like I'm not going to lie, my parents had me as an authorized user so I could get their history to establish my credit. That was the first step in making sure I responsibly built credit, but it doesn't make it so that you can get credit right away or a home loan within the first month of getting that artificial trade line put on your credit report.
Right. Doing little hacks like this is not the optimal way that we would advise you to increase your credit or in order to qualify for a mortgage or a refinance or an equity loan.
If you're applying for a mortgage, lenders are trained to filter this out. So like we'll see if trade lines are authorized user accounts. It like literally tells you on the AUS, the automated underwriting system, like, hey, are these all authorized user accounts? Does this guy have actual credit history? It tells the underwriter what to look for, right? And to clear it so you can fund that loan. So they're not blind to it. Like if you have,
right.
And I'm going to use, what was her name again? Noelle Randall's example, right? She said, I'm using her example because she said 2002, 2003, I went through a tough time, foreclosures, bankruptcy, I lost everything. I started to pay back my debt. And then my dad added me on, like, you try to do that now, yeah, you won't qualify until those bankruptcy and foreclosure seasonings have passed, right? 2-4 years plus, maybe 7. So it's a good tip, but it's not going to get you qualified right away, because if you had a negative mark like her, there's seasoning periods that have to pass.
Okay, let's move on to the final video that we're going to react to. This is Mike the Credit Guy. He's got like over 423,000 subscribers. Pretty good. And the video is called 3 Fastest Ways to Instantly Boost Your Credit Score in 2025. So this is a more recent video, only 4 months old. So potentially this video could be, get a lot more views. I saw it. I clicked on it because the title is relevant. I want to instantly boost my credit score if I am looking to, do a HELOC or a HE loan or buy a house and my credit is not good enough. So yeah, if I was a purchaser or a borrower, I may have clicked on this video, and let's see what kind of advice that he gives.
Coming in at the number 2 spot is going to be adding a secured loan to your credit profile. This is exactly why I preach this to every single person out there. Banking with a credit union is super important, because if you're banking with a credit union, you can do a secured loan. As an example, Navy Federal, you do what's called the pledge loan. So what you're going to do is you're going to invest your money, let's say hypothetically $500, you're going to give it to the bank. They're going to lock it up in your savings account. Now they're going to tell you, oh, would you like us to put it on auto payment? And you say, no, don't put it on auto payment, because you want to make the first payments until that secured loan hits your credit report. Once it hits your credit report, you're going to pick up the phone and you're going to call the credit union or whoever the bank is that has a secured loan. You're going to tell them, I want to pay off 80 to 90% of the loan and put the remaining balance on auto payment for the next 24 months. You want to do this for a minimum of 24 months. Anything shorter is not worth it, because remember, you're adding a new credit product to your credit profile. It's going to reduce your average age of credit. We want to keep it open as long as we possibly can. If you can do past 24 months, maybe a full 4 years, that's perfectly fine, because remember, once you pay off that 80 to 90%, the balance is going to be very minimal and your monthly payment is going to be very low, and that money is going to come all back to you. This is a much better option than a secured credit card, because a secured loan is actually making your relationship stronger with the credit union, allowing you to get better options for better credit cards, better loan terms at a lower interest rate.
Okay.
Does he work for the credit unions? Because man, that sounds amazing. Because I really want to build that relationship with the credit union to get me every other loan product out there. Oh,
all right. This is I say this for the end because it is funny. It'll be funny to us because obviously this is not something we would recommend to anyone ever.
I mean, it's if you're building credit or you have no choice because you had a negative financial experience that you're trying to rebuild from, like secured credit cards and I think secured
Loan from a credit union.
loans. I've never actually heard of that secured loan before. That's the first time I've heard of it.
I've never
It's
even
it
heard of this.
like I've
Yeah.
never heard of it. I've never. It does. It sounds way too complicated. Like it sounds like if it's if you have to
Like,
explain it in that detail to do it, like I don't know if
like
it's worth the
why?
trouble. It's
Why
like
would you do
why?
this?
Because like you
Yeah.
could have just gotten a secured credit card and just put Netflix on it or whatever. How much is Netflix nowadays? I don't know. Or
Like
Spotify's
20
like
bucks
$8
ish.
a month or something, right? I don't know, something small. Like I pay my New York Times subscriptions $4.99 a month, right? Like I
Uh-huh.
would just literally get a secured credit card with a $300 limit and put that on auto pay at $4 a month or $5
Yeah.
a
No
month,
annual
and
fees.
and then just and yeah, no annual fee, and just let that go. That's all you need to
Yeah.
do. It's like, why are you going to a credit union to put $500 into a savings account to take a pledge loan is what it was called, and then wait for the account to get set up, and then call it in, and then make a one-time payment, and then somehow take that and turn that into like a 48-month payment. What is that? Like that's just no. Doesn't make sense. I'm
Yeah. I
sorry.
mean,
It's not that
for
rebuilding credit is not that hard. Like I don't think it should be that hard.
yeah, especially for our context of this video, speaking to people who have been who are trying to purchase or refi or whatever, and then they got disqualified because of credit. Like, okay, if you tell someone wait 2 years, do this trick, wait 2 years, and don't do anything else, like that would be such a bad advice. Like that would be
Mhm.
criminal advice.
Like my favorite tip, just if you made it this far, I hope you did. Like my favorite tip is always just look at this screen from Experian, right? Just got to get this credit utilization down. Get
Yep, get it down.
target
Pay on
it.
time.
Like understand where your credit cards are. If you have 10 credit cards, organize it by statement due date because every one of these people talk about statement due date and every one of these people talk about utilization, right? So that's the one common thing. So my if I had to give you my 2 cents on it, organize your credit card bills by statement due date so you know which ones you could pay off first for the least amount of money to get it down to 80%, 50%, 30%, 10%, right? That's what I would prioritize if it were me. I'm not telling you some like crazy math formula, right? It shouldn't be this complicated. You could literally get a blank piece of paper, the name of the bank or the credit card, the payment due date, the statement closing date, because that's the day it's reported to the credit bureaus, and what my current balance is and what my limit is on that card. And then I would just do the math real quick. Like I'm maxed out on this one. I'm maxed out on that one. I only have 10% usage on this one. What are the easy ones I can win? It's those store credit cards that Peter was talking about, like is JC Penney still in business? Like
Yeah.
Office Depot or whatever they're called, right? Office Max, I don't
Yeah.
know. Circuit City, but say for
Circuit
example you have those
City.
Starbucks credit cards, right? And then it's like lower limit, like $300, $500, and you max that card out. And again, I'm using those scenarios from the videos we watched, but like $500 credit card limit, you might be able to pay that down to 50% for half the amount, $250. And all of a sudden you'll see, look at that. You'll be in somewhere in this 580 to 669 range, right? And if you can stretch it and you budget without being late on any other payment, you might be able to get it down below 30%, which will get you into the 670 range, right? Or higher.
Right.
So you're gonna get it's not rocket science. It's just you gotta understand where you are financially. And literally
It's
it's like
discipline.
it's
Yeah.
discipline. You gotta like know what your financial picture looks like. Give yourself a little bit of a spiritual awakening with your finances. You don't have to understand the full math behind it. It's very simple. If you have credit, don't use it unless you need it and have a purpose for it, and then pay it off, right? And don't use too much of it. So it's like
Yeah.
that's I think
But
the simplest advice. It's like it's you don't have to overthink it.
yeah. And I think the final piece of advice that we could give is don't chase a perfect 850. You really don't need to stretch yourself to get there by doing these little hacks and tricks. Like,
generally speaking, like 760 and up, 740 and up, you're going to get really good pricing. And typically when you have a lot of equity in your home too, your credit score has less impact. So say, for example, you have 50% equity, 40% equity in your home, then the risk falls a lot to the lender. So instead, if you have $1 million house and you ask for 600 grand, you don't need a 800 FICO score to get the best rate. You could get it still at like a 680 FICO score because all the negative risk-based pricing is gone because you have so much equity in your home. Similar to like HELOCs, right? So say, for example, you have an almost free and clear home with a lot of equity and you have a okay FICO score, but because you're borrowing less than 50% on the line of credit with whatever you owe on the home, then yeah, you're going to end up getting basically the best terms out there, right? Because
yeah,
you've eliminated the lender's risk to give you a line of credit. So it really depends on your circumstances. You might, just as Peter said, you might not need that 800 FICO score. But if you're new to credit and you just bought your home and you barely have 5% of equity in your home, then yeah, it's a very different scenario from someone who is matured in home ownership, has owned the property now for 15, 20, 30 years, and that home of yours, you either own free and clear of liens, or you have a very small mortgage left, and you don't want to restart the clock and refinance it because you've paid 20 years into the mortgage and all of the interest was already made by the bank and every single payment you're making now is going towards principal. Yeah, I would look at a HELOC potentially if I had something, a purpose for it, right? And then budget, and it's everything. It's all encompassing. It's not just a simple, it's not a get rich quick, right? There's no hack in this, right? It's hard work. And I think you're gonna hear that from me a lot. It's hard work, man, and you earned it if you did it.
Well, hopefully everyone who watched this video and you stayed to the end, you got a lot out of this and you learned something. And if you are in a position where you do need to improve your credit, you can take the steps that we recommend and recommended by a lot of the credit specialists out there to improve your credit score. Not the hacks, not the quick and easy fixes.
You don't need to pay for it either. Number one thing too is all the real good information on credit is free and it comes directly from the bureau. So there's no reason for you to sign up for a lot of these services, right?
I wouldn't pay for it, but if you have never gone to the gym before and you want to get fit, there's a use case for personal trainers, right? They're not cheap. You're paying them to keep you accountable. So in that way, if you do want to pay for a coach or whatever, that's up to you. I don't know, but you don't have to. You can do this. Like you can do it.
If you're watching us, you're definitely wanting something better for yourself. So
all right, well, that's it for us today. Thank you so much for staying to the end, and thank you for subscribing. Thank you for commenting and liking and sharing the video and doing all that cool stuff. We hope you guys got a lot out of this. This was part 2 of our reacting to credit advice series. If you want us to do more stuff like this, more reactions or different topics, please let us know in the comments. Remember, we're the Clear Close, the mortgage experts that help you get clear to close on your next mortgage. And we'll see you guys on the next one. Bye.